traders. Let me turn off the echo. Okay, that should do it. This is Red Ben. It is Wednesday, June 7th, 2023. You can get a hold of me on Twitter. It's at Red Ben Trader. Make sure this mic is in the right spot here. If someone can let me know that they can hear me, I would appreciate that. Feel free to put comments or questions in the chat. I can't guarantee I'll get to all of them if there's a lot. But if there's only a few, I probably will. If you want to learn more about the algo I'm using, you did talk to my coach, Simon. Simon also runs a trading room where I trade and where he teaches us methods for using the algo to execute trades with futures. So if you want to learn more about that, email Simon. It's trade, the letter N, word perform, at gmail.com. And if you let him know that you found the room through me, he'll give you like a week free in the room to check it out. There is a cost associated with the room and the algo, but it's worth it. Honestly, it's not crazy. Once you realize how powerful this software is, particularly if you want to find something more consistent, because you're using leverage like with futures, but it would work for actually many of us use options setups too. But yeah, anyway, give them an email if you want. I'm not going to do any more marketing, but today was fun. Let me show you the candle chart. It's not quite closed yet, but I'm not going to take a trade in the last 15 minutes. But so we open the day up here. I want to make sure we can see it all in case something interesting does happen at the close. We opened on the green candle here. And yesterday was a balance day, and I did a stream last night reviewing like what techniques might have worked to trade days like this. Today, those same trading techniques would be not working very well. You have to be able to adjust to the market conditions. You can't try the same trade everywhere every day. You don't have to trade if you don't have a tool that fits that market, but you need to know what markets your trades work well in and when they don't work so well. And like I said, I've got plenty of trades in my toolbox, but you have to separate them between trades you can take on days like this where you expect range bound balance versus days like this where you expect big like basically like trends. But in this case, what I was going to get at it is that we actually had a unidirectional move up, but then they trapped them and they had a much bigger unidirectional move down with very few significant pullbacks. So learning, first of all, how to identify this versus this and what to expect when this happens versus what to expect when this happens. Now, I'm not saying that you're going to know up here that you're going to take out this low. That's not what I'm saying. But there are things you can look for that can almost rule out a complete change in direction. And then there's conditions that make it way more likely. Primarily, that comes down to whether or not you've taken liquidity and what the market looked like at the turn. It was not hard, in my opinion, to identify this first pullback here as tradable to the sell side. The hard part of today for me in the morning was, first of all, you had to be ready to trade right at the open if you wanted to catch the long. Otherwise, you got caught chasing, which always sucks. But then sometimes, okay, often when you get those rips in the morning like this, where it gaps up from the previous day, tests down and rips higher, usually it just keeps going. But in this case, it couldn't. And realizing that in a market where the longs are fully in control, they are going to take this high 100% of the time. Okay, I'm not going to say 100, but you're going to get it a lot. So when they got stuck at this voodoo range level at 14,678, you had to be, you should have been looking and figuring out if that trapped any longs. And there's more than one way to do that, but I'm going to show you how I did it. And then what was really difficult, and it always is difficult, and where I messed up today, is even if you get this move right, when you've had an area that has a lot of interest, primarily when it's just beyond a high volume area, so the edge of the high volume area, the blue dashes here are the value area for this like consolidation there. What's going on here? Okay, they're just chilling out. Pinned it basically to 14,300. Okay, that's cool. You get very used to taking all the longs you can down in this zone and taking all the shorts you can up in this zone. And you can see when the market shifts, not only do they stop out the shorts who got short here and tried to take that ride down when we opened, and then get stopped out. But then since they weren't able to collect liquidity up here and continue higher, they actually came all the way down, ripped, of course, right through the value area, which is what we expect, or we should. Even on a balance day, that's usually how it goes when you've already developed a value area of like a balance zone with a high volume area. You should easily slip through that. So that wasn't a surprise. But when we came back into this low volume node down here, I was ready to buy it and did multiple times, and actually went green to red. I was up about 900 from primarily this drop, and then thought I'd be a hot shot and try to catch the reversal. And I thought I saw some things that I liked, but in retrospect, I could have avoided them. In fact, I've practiced avoiding them and didn't follow the rules, my own rules. I didn't do anything super tilty, and when I realized that I wasn't necessarily following all my rules, I stepped back and then reevaluated and caught the short. So, like I said, I was up like 960 something, I think, here. And then tried multiple times with very small stops, but still multiple times to catch a bounce in here on a smaller time frame. And if you look at this is the 2-hour chart. If you look even on a 15-minute, they gave you this what looked like very good opportunity where we got here. Let me put the fractals on and you'll see. These are Bill Williams fractals. So after the swing low, they show up. You don't see them right away, but after the swing low and we start to leave the area, that level is marked. And then you can just extend it like I showed yesterday. Just extend that to the right. And if you have a bullish or balanced market, chances are you're going to have a trade opportunity there. Um, well, this time you did, but you had to be very nimble about it. And I didn't trade this very well. And then I got, I don't know, uh, it's not really greed, but like stubborn, I guess, and tried it again here. Um, and then after we went through that, without really slowing down at all, I realized I need to be paying attention here, and this might actually be a sell. But it's very hard after taking longs in that zone over and over again to see it get rejected and then accept that the ideal short was here when I exited the long, or should have exited the long. When I had the sell signal on the long, I should say, when we rejected this voodoo range level, and the high value high volume area is basically this voodoo range here. That whole area in there was where all the volume was, and we came back up. We couldn't hold it, and we gave it up. And on the algo, it totally set up. But did I take it? No. I was looking down here thinking I could catch the long again. I wasn't paying attention to the fact that that could actually mean we'd change character, particularly after this big fake out. So, like I said, I missed it and was frustrated about it. So when it came into this voodoo range level, I thought it was this one. So I tried a setup here and got owned. And suddenly, I think it was here. It was pretty nasty. I don't remember. I'll see it on the algo and I'll remember. But there was some low over here. Had to be this one. That maybe it was in here, or else I thought we reclaimed it. I guess it could have been here. That's really gross. But I'll double check and see where that stop came in. But at that point, I was like, what the hell am I doing? Like, I'm shorting trend down. Like, this is insane. I should be short. And so thankfully I don't know, shook out of it, I guess, and came back. And then my re-entry, let me check. I actually wrote it down in the room. It was, okay, didn't get my stop in on time. That's right. So that would have been 8:52 Eastern. I got hosed. That was early. So it wasn't this one. I wasn't fighting that. 8:52 Eastern. Here. No. That can't be right. Oh, I know. It's 10:52. So 11. It was down there. 10:52. Yep, it was this. So I did try to so I saw this one. It wasn't this. I didn't have a location. That it was this. I wish I had my entry, but it must have been the 10:52. So it was in here somewhere. I tried to long and didn't get my stop in on time. I was supposed to take a very low risk, like, shot. And it, like I said, it wasn't high odds. And I had this location, but that it didn't really do anything there. I don't know. I just wanted to be trying it for some reason. It did set up. I was doing, in retrospect, like here, when you see that, and then like my thinking is like, wow, this might actually hold. And so as it started to go up here, um, it was, nope, it was in here because it was before 11. So I guess it was before this close. It was in here somewhere. I had the right idea, but I wanted to have a tight stop, and I tried to get the stop in, and they flushed through the area. And so it, like, the way I have it set up is like when I've got brackets that automatically put like OCO orders on in like the event that I push a button and like get into a trade and then immediately uh, lose power or whatever. So it always has a stop, but that stop is like a max loss, like not something that makes any sense on the chart. It's not like a swing low or like level I found in the footprint or whatever. It's just I don't want to lose more than X amount on any trade. So if I'm not trading well, I need it to get me out after this level. But it's deep. And so I got in here, was putting in my order, trying to move the stop from very far away to like 7 points away. And by the time I had put in my order to move it, to change the order, it had already taken me out. So this wick must have been really severe, and it just effed me, and that was infuriating. So that's where I got frustrated. So I definitely missed this, and then tried to buy in here and got max stopped, and I was just like, and then I saw it go, and I was like, okay, I need to sit back, and like I got stopped out near the low just by like chance, and then it ripped back up right to this fib level that I was gonna take profits at, and I was like, yeah, that sucks. And right here, so it went over this and collected liquidity, which is what I wanted to do. That was the whole point. I was like, I lost too many small stops here and gave away my green day. I need to like get a winning trade basically, and I wanted to do it with a tight stop, and I was impatient because what I should have done is identified that we were bearish, like thought like F the long, let's look for the short in the place that I would sell the long. So what I should have done is skipped this completely, waited for the point where I would sell the scalp long and then short it. Or if I'm in good spirits, which I wasn't, I could have tried the long in the with a better setup and a better stop and then flip. So that would have been like the fancy way to do it. So I saw that and I was just like, okay, I need to take a break. And then because I gave away a green day and that sucks. So where was the re-entry? 8:30. No. Back at high water mark of the day. So I was back on top by the end of that hour. So that was, there's the close, by the way. We'll look at it in a minute. So by the end of this hour, so here, by the end of 11, by this point, I had dug myself out of the hole and made back everything I had made earlier and then some. Just with one trade right here. I got in at 14,491 short. So here. So like I said, when I saw this, I was like, this sucks. There's the bell. And then I was like, I can't be trading that way anymore. I need to just go with the trend, find a good setup, stop messing around, and caught it Because remember, like this here, I was not in a trade. I had stopped and was just like resting here, like infuriated at myself. And when I saw this entry, I was like, I need to take that. So at 91, so I did take this one and held the runners all the way till good enough. I'm out here was 9:23 Pacific, so 12:23 before this green candle down here. So and I got a good day from it. And then that was in the what's it called? The evals. And then once we tried to bounce and consolidate it here, I took what was basically a breakdown trade with micros using the performance account, like the real money account, and got a nice flush, but got out way too early. I could have made a lot more. Then I tried a breakdown. Is it here? Yeah. So I took a breakdown trade here and it worked. But then I got stopped trying to buy it. It must have been here. But eventually it set up again right there, I believe. It set up again at that same level and I caught along, but I held runners and it stopped out right before I started the stream. So I forget. I think the stop must have been here. So all in all, it was a green day across all accounts. Here, I'll show you. Performance. Okay. I mean, it's nothing exciting, but so on the two top ones are evaluations, and then the bottom one is the performance account. And like I said, I wish the performance account was at least twice that. That's my normal goal. But after what I usually do is I start in the evals, and if things are going well, I copy the trades to the performance account, but just with micros. And today, because I was sucking in the morning, I decided not to do that. But then once I ended the day well, and I mean my win rates were fine in the morning, but you can see this one is the one that I was trading initially, and it just got way too many trades trying too hard to that's number of contracts that exited, and I take 3 here out and 2 there out and 1 out there, and so it's not that many entries. It's like a fourth of that basically. So I mean it's around there. So it's probably like 8 trades, with a 65% win rate, trading subpar in the first hour and a half. And then this one was just with the trend, and I was copying manually. So I'd click this one, and then if it was working and I got a pullback, I'd click this one. And so that's why, even though I didn't take losses in this second account, and you can see the win rate's pretty strong, I was being conservative with my entries, which meant I didn't collect every possible point or whatever, because the entries were just later. And then I did pretty well at holding the runners today, which is a huge goal for me. And then, like I said, the performance account was just a momentum trade, but it was with micros, so it looks like a ton of trades. But I was just doing it in micros so that I could manage risk. But I did try a couple times and failed. You can see that the win rate is it's not great. But those were really small stops. I would just try with a 7-point stop, and then if it worked, I'd hold it. So it doesn't look very good. And then someone was asking, how do we know you're not just making this up. Like, let me see. I don't know if I can, but yeah, I don't think I can show you without showing you my account number. Let me see if I can. Maybe I can. I don't know how to do that. Yeah, because I was going to put something on top of it, but I realized once I pull it forward, I think you'll see all the information. But well, anyway, I thought there was a way to share that it's a PA account on the bottom, but I'm not entirely sure how to hide the rest of them. I thought I could hide the number, but it doesn't look like I have that option. So I thought there was. Yeah, see, I thought I could hide the account number, and I can, but then you won't see the PA. So, oh well. You also have to trust me, I guess. Yeah, I mean, in the room, I share it. Whatever. No one's gonna. What are you gonna do? Okay, so eventually, at the end of the day, we did get a flush. And then we found some buyers at the voodoo range level, but they haven't been able to do anything, right? So overall, from the candlestick perspective, that's what we were looking at. And, if all you were doing all day was like trying to buy, like pullback, like buy the dip, right? You'd get pretty wrecked, right? Even if you were selective. Like I said, I mean, in the morning, I made some mistakes for sure. But like, here is a fractal. Here, let me get rid of the indicators. So here's a fractal, right, where it extends. And it gets a response. But if you didn't get out within 7 points, you were done. And what I usually do is I might have like a 7-point stop. And then at 7 points, I'll take off half the risk so that like I'm basically free to like hold it. But if you do that in this kind of environment, you're just going to break even, fail, break even, fail, break even. And eventually you're down, 35 points or something. And it's pretty sick. But yeah, if you just limited yourself, is this the 15-minute chart? Yeah, if you just limited yourself to 15-minute pivots, right? And you're like, I can buy here, I can buy here, I can buy here, and here, like the major pivots. Literally none of them got you, like this one, it was maybe one. Let me see. What does this one give you? Okay, 37. Did you survive a 7-point stop? Yeah. And then you got... Okay, so you did get like one trade go to profit if you were doing it that way. But, then this one might not have even set up, hopefully. But if you are trading a smaller time frame, which most of us are, what you're going to see is just absolute carnage for the longs. So again, every time they come into one of these pivots, which we're going to leave the same just to demonstrate how often these actually fail if you're fighting a trend. So again, this one, it looks like a lot, but that's if you got in at 90, I mean, I guess that's not so bad, but you'd have to get in right away. But then look, it came back to the level. If you took that one, you gave it all back, right? And then this one, it tries to lift, stops out, pretty sure. And then maybe you get 38. Yeah, you got 20 points. So you'd get to profit here. It rejects right at the fib of the voodoo range level. Comes down to this one. Triggers again. That one, how does that do? 04 to... No, got you 20 points. I guess as long as you were getting in right at the spot, right at the pivot, you had an opportunity to make money long, but you were stressed about it and you weren't feeling too hot, right? And then is there another? Well, if you started to take these, so if you're like, okay, I've got a low here now, and you took it right here, stopped, right? And if you tried this one, stopped, tried this one, stopped, So you can't just buy stop. Like literally all of them fail. If you try to do the recent ones on the like small time frame. But if you limited yourself to a higher time frame, how would you do? Then you would go here, here, and there. So let's check that. Oh, does it not show the other ones? Okay, we're going to have to make this a different color. Interesting. Okay, so we'll make this red because I don't think they work very well. Red. And red. And then we'll go to 3 minute. And we'll say that you can only get involved if you have a bounce off of the red level. Now, you don't know that level's here, so this one doesn't count. You know that level like there. That's when that swing low is confirmed. So if we return to that level, if you want to have a small stop, you'd have to buy like right there. Kill. If you tried it again, stopped. See that? So you could try it once, take a stop. It comes back and recovers it, takes another stop. So you're 2 down. There's another pivot. You don't know about it yet. Now you know about this one. Oh, and this one overtook this again. So if you tried to buy a breakout, which I don't recommend, killed, right? Then it breaks out and you think, oh, we're going higher. So maybe you buy this test. That one actually works. And then it comes back to it again. And that one actually works. Comes back to it again. That one stops. Then it comes back to here. That one. Yeah, that one works. Yep. That one works. Oh, but then break out. Stop. Doesn't reach. Break out. Stop. They usually will. If it, okay, here's one. Stop. So, I mean, you gave back the profits, right? Especially if you were buying breakouts. You just got crushed, right? So that's really important to see. Can I just... Okay. All right. So that's important to see. Now, let's look at it from the other direction. What if your only trade was to short pullbacks? Once you discovered, oh, did I get rid of the lock drawings? That's okay. Once you discovered that it was trending. So, you know, let's just say you missed this one, even though it did set up on the algo. Let's just skip it. And then we'll just use the exact same rules, more or less, where we want to return to an important level and then get short there and follow it back down. So you can see if you waited. Okay, here, let me explain how this works. So, all right, so we fall through it, right? I'm not talking about trading the breakout, not there, not selling that. I honestly don't recommend that, not the first test. Instead, what we want to do is watch for that level to be either rejected or not reached on a pullback. Okay, so as we approach it, we go lower, right? We lift and they can't break back through it. You can also use the voodoo range levels, same exact concept. You can't get a close above and but yet it closes back down here. This is your best opportunity for the breakout trade, if you want, is you take it there, if you have to do it that way. If you had a reason on the footprint to short this, I'm all about it. But if all you had were the 15-minute levels, then you might not know about it. Hold on, let me just check this real quick. Make sure everybody's cool. Okay. All right. So then you don't really have any more levels back here, but you have this one, right? So we're going to mark that one. And again, you don't know what's important until here. Okay, that's when it kind of shows up, like right here. You know it's important. Kind of looks like they're trying to bounce off it. What we want to see is breaking through it, like that, and then returning and failing at that level, like that. Right? Comes back up, rejects, and then breaks down. That's right there is the breakdown trade, in my opinion. If you have a reason to short the pullback that might be coming, how do I just move the damn whole thing? Okay. Up to here. I'm all about that. It doesn't come. And then here's another one. All right, we'll just move this because we're not going higher. Okay, we know about it here, 2 or 3 later, right there for sure. We know about it. It breaks through it. See that? Now let's see if we can reject it from below, like that, right there, right? And it closes here. If you're going to take a breakdown, it's after that. Now this one did not break down. See that? It rejected the level, but it didn't break down. So you're probably safe there. Again, if you want to use this one for a retrace level, that makes sense. There's, did it break it? Can't tell. It might not have. Very close. We'll call it a stop. I don't know if it actually broke it. Oh, I can look. Low was 39.75. Low was 40.75. It broke it by, 4 ticks, but it broke it. So we'll call it a stop, a small stop, but potentially a stop. I guess if you put your stop up here and sold here, you'd still be fine. But then this same concept, that level is identified as important here. Break through it. Now let's see if it rejects. They try. So now if we come right back through here and break down, it's a breakdown trade. Oh, it hasn't happened yet. So it's just the reverse, basically, of... and then you can use these as well, but those are primarily for when you're not trending. So if we are balanced, like we were yesterday, and I showed this yesterday, but it's might make more sense now. So if I was just looking for shorts, the spots I want to look for shorts are there. And when do I do it? So I know about it here, right? This one. I don't short it yet. We come up, we reject, and now I need a breakdown, right? So like that's the candle low. That's your breakdown on a smaller time frame. And then you should expect if they get underneath a low, they're going to come back up because it's not trending. So, and then here, we knew about this one way back here. It came up, it tested beyond it and closed below it. That your breakdown is right there. And there you go. So, and then it did it again. Reject, break down, reject, break down. So that works as long as you are like if you know where to target it. It's good for a trade location. Now if you were using that exact method in the morning on the 15-minute chart, best case scenario, you don't even have a trade there, right? It goes beyond it and breaks beyond it, can't reach this one and just takes off. So this breakdown, like you just miss it if you were trading the 15-minute levels. But then these Oh, we already showed that, I think. That this is the same thing. If I didn't, I don't remember if I showed this one, but it's the same idea. We test it, we reject it, and that's the breakdown, right? With no close above is the most important thing. Okay, so two just simple ideas of like, how do I join the trend? When do I know when a breakdown is safe? In my opinion, it's after it's already traveled down there, tried to retrace or successfully retrace, and then falls through it again. But it has to be a key level. It's going to be better and better, your levels, the higher the time frame you find it on. So like if you go to a 2-hour chart and you find like these levels, well, it makes sense that if I mark this and we fall through that and then come back up and can't close above it and reject and then break down underneath another candle, yeah, it's going lower. So that, like I said, simple concept. Now, let me show you what I was looking at and some of the ways that the algo helps us execute with more precision, because it's one thing to know the location that you're looking for, but if you're always waiting for a 15-minute breakdown before you get involved in a trade, you're leaving a lot on the table, to be honest. And your risk mitigation is going to be limited to however big that 15-minute candle was. Or if you're using the 3-minute, it's that one too. But again, you only have what you have. So if you're instead looking at the footprint and the time and sales and the DOM, like order flow, as well as the profile, which looks like this, you can find a lot more locations and then a ton more information about which side has the advantage at the moment, and when that changes. So the algo that gives the stars and the colored backgrounds and the colored bars and all the symbols and the lines, all it's doing is it's looking at that stuff, all the order flow stuff, and if it sees one of the conditions that we told them to look for, it will present it to us visually. What that means is I don't have to have a million screens, one with a profile, one with a footprint, one with a DOM, one with time and sales. I don't need all that. I just need to memorize what the patterns are visually that usually result in consistent trades. Now, the really good news about that is that also means that in retrospect, I can go back and I can look at my trade and be like, okay, here's my entry. What did I see? If you were using order flow, you know what it resulted in, right? Like I can go back here and I can look and say like, oh yeah, here's the VPOC and there was a lot of volume here. Like in retrospect, it's pretty clear. And you can say like, there's a low volume node. Maybe that's what I was looking at. But like, you can't be sure that like you actually interpreted that correctly. And if you don't have a great like procedural memory and you just take a ton of trades, you may forget whether or not you noticed something the first time before you traded it. Especially if you've reviewed this over and over and over again. You start seeing stuff that you didn't notice when it's live, because it's a lot of information, right? I mean, that still happens on the algo too, but it's a lot easier for me to convince myself that that condition I'm looking at that gives me the blue dots, it's there. It's on the time and sales or the footprint or the profile. Like it exists. I don't have to search for it. And I know exactly where it happened, right? So like I can mark it like this. And then if I want, I can go to the profile and I can be like, oh yeah, there it is, right? But I don't really need to because, like I said, that's what the algo's doing for me. So instead, I can just say that condition exists. And so I can look for other conditions that influence that or are related to it and just look for the patterns. I don't need to know what the footprint looks like, and I don't need to watch the DOM move and look at, like, I don't know, anything else you look at on a different screen. I don't need to monitor it when I'm trading, and I don't need to go back and audit it when I'm reviewing. It's just a dot, and that's all I need. And then, like I said, once you've used it for a while and you start to learn some of these setups, you you have a lot more. It becomes a lot more systematic because I can't try to convince myself that my entry long at like 14,665 or something made any sense because there's no long entry here. Like, I can see it. I know what the time and sales look like. I know what the DOM look like, and I have no signal to buy here. So if I was sending buy signals in here, it's wrong, and there's no question about it. And so sometimes before I use the algo, I needed like accountability buddies to be able to prove that I was making mistakes because I was so stubborn and at times so biased that looking at this and like remembering what the DOM looked like, I convinced myself that, like, you know, it looked conceivably bullish for a minute and I just got faked out, and that's okay. Losses happen, right? Well, it is okay that losses happen, but what if there is a way where I can like not make that mistake anymore? And instead, the errors that I'll have are primarily based on what the market does, not me thinking it's bullish when I have no true evidence of setups that I actually have metrics on that I know usually result in a move of, 2 Renko bars higher or whatever your metrics are. It just makes things a lot easier, and it builds confidence for me because all of a sudden you start to see these patterns everywhere when you do these reviews, and you realize that, like, if I just waited for that signal or that like multiple signals in this order, like my win rate will go a lot higher. And that's how I like achieve a 60% win rate plus sometimes, is just when I wait for the signals, they usually work. Yes, there are stops. You still need to mitigate risk and all of that. But the algo also helps me figure out where to put those stops. For instance, here, if I was being greedy and buying up here for some reason, it's showing me on this dotted line that is basically the last resort of where buyers must defend. And if we get volume, which is the yellow line, that's where most of the volume is in all the bars. If we get that yellow line below that dotted line where my entry was, which happens right there on a purple bar, but purple and pink bars don't always count with some of these rules. But here, no doubt, we have volume developed below where that dotted line was. If I tried to buy this, like, I'm thinking like break it. Like, what I used to do is I'd be like upset that I missed this. And then I'd see a pullback and I'm like, okay, I know it's bullish. If I can just get higher than that, then I can ride the next wave up. And then we break over it and I buy it and they reverse. And I'm like, but it's still bullish. Like, I can probably put my stop, I don't know, like maybe under this, right? And then it just rolls over or whatever, right? And you don't know, like this. And you don't really, if you're just watching the DOM, you're just like, I don't know, like stunned. and you're like, okay, I'll just exit on the next pullback, right? And then it happens, and maybe you don't quite reach where you thought it would, and then you break down again, and all this time you're like, oh shit, I could have been fucking short, right? Like that's the kind of stuff that causes us to tilt. At least for me, it was, and I mean, it still happens if I make mistakes and don't follow the rules. But the idea is, if I practice saying, if I make a greedy decision to buy a breakout for really any reason, if then volume drops back below where the line in the sand was for at the time when I got in, there is no reason to keep holding. Now, does it mean it can't go higher? No, you might get another lift. But usually, once this bar has closed, the chances of this bull move continuing higher are way lower. And that's one of the reasons why the line's there. And then you can do the opposite as well. So for instance, if you were like, this is definitely bearish, I have a premonition that, 14,670 is the high, and I've got this sign of aggression here with the orange bar. And so I'm just going to go short right now. I'm not going to wait for the pattern. I'm just going to follow this aggressive trader short for one reason or another. Well, your level now is where the volume was, which is basically what this dotted line is showing me. It's not of the bar, but it's we're calculating it based on like where the where price has been recently. Let's put it that way. And so here I'm a happy camper. It looks short, right? And then when it comes back up, remember, it's not that I put my stop there. It's that I can't get the yellow line above it on a bar that's not pink. So it's very normal to come up and test it. That, it didn't quite make it, but this is like actually a setup short. That's the better short, is identify this, wait for the pullback. If they reject and then you get a signal, especially if you get a signal on the next one, now it's definitely bearish. But even if I was a little bit aggressive and somehow, some other way, thought that this was bearish, I know when I'm wrong. And I don't necessarily have to get over the high to know that. I mean, in this case, it's not much of a difference, but when it's $20 a point per contract, it adds up, especially as you start to scale up. But what we'll probably see is that this will hold. Yeah. And then here, same thing. So aggressive signal to the short side. Here's where most of the volume has been done before that. Okay, so most of these guys, if you asked, where did you all take your trade? Most of them are going to answer on that line. And what ends up happening is when it's bearish, you're not going to be able to get volume above that, because every time they try, they're just going to sell. Now that one didn't even approach it, but let's find the next one. So that was just an easier one. And see, it doesn't shift right away because this move, okay, here's the shift, right? So now we have to wait. Now look, it's not shifted yet on the star, right? It's shifted down here. So as far as I know, we're going to come back and retrace up to here. As far as I know, that's what I would expect, meaning I shouldn't be shorting the star, because right here, most of the traders in the last period, wherever we went, most of them did business up there. It's normal to have price return and test that level, just like it is on the daily chart. If you open up a profile, most of you should know this if you're trading futures. If you open up a profile with each day, these are just the regular trading hours, but and then I find, let me just go back a little bit. if I find the VPOC for each day, so like this move here, the VPOC is this purple line. Even when it's bullish, it's normal to come back into it and then bounce. Right? That's just the way markets work. They like to go back and test to make sure there's still interest at those key levels. So lots of volume here. The gray is the volume. The next day, we're going to test that. And then as long as there's buyers, we can go higher. Here's where all the volume was. They try to test it and they can't. That's bullish. They go higher. Now they come back, go right through it, because last time they didn't even reach it. When they go right through it and they don't buy it, that's potentially bearish. But what's really bearish is coming back up and testing it and then rejecting, such as this. If I extend that one, we went lower, we came back up, and we reject it, right? So, and those are just the daily ones, right? But markets are fractal. You can do that anywhere, any time frame you want, and it'll still more or less hold true. It's not 100%. And the tighter you get in your time frame, the more the noise is going to matter, because you're probably going to also limit, like if you're going to size appropriately for like a 3-minute chart, going back to yesterday's point of control is going to kill you, right? If it's a loss. So you have to still look for the trade and with the current time frame in mind, but the theory holds true. So like I said, watch. It shifts down here. We have a change in period, okay, and a bunch of algos, just like the high frequency trade algos, they activate at the change in hour or even 30-minute maybe, but definitely the hour. Like the last 10 minutes or so of an hour is really normal for the high frequency algos to get really active all of a sudden. So you will see big volume changes and like attempts to move the market like right at the change of the hour or at the 30-minute mark or whatever, like with the clock. So it's very normal to see this big drop in this line in the sand basically align with a time frame change or whatever, a period change. But let's say that you saw this and you thought this was bullish for one reason or another. If you got long on this green bar, which it is a sign of aggression, so is the triangle up. Most of the volume at that point was here. So again, in a bullish market, if you imagine that each of these bars are the daily bars, what should happen? It'd be normal to come back and test it. It would be abnormal or very bearish to get volume put in below it. And like I said, that yellow line can be thought of as the volume line. So you do on a very small time frame lift after they attempt but fail to test that, just like we saw on the daily. But since they failed to test it, what it means is price is going to have a really hard time breaking that one without being sure that buyers are still waiting down here. And like I said, that works on the daily chart, the weekly chart, the 3-minute chart, whatever you want to do. And so what ends up happening is we come back and we trade right through it, putting volume in below that important level, giving me a signal to be bearish. And another. And another. So at this point, even if I was wrong and I bought here thinking that the low is in, first of all, the entry is 25.25. My MFE, it's more than 10 points. So if I would have been risking 10 points on it, which is pretty normal, like if I put my stop here-ish, I reached my 50-50 goal, which is where I yeah, once I've made 1-to-1, I take half my contracts off, and that way, at least. And if I'm trading with the trend, I can then hold runners. If I'm not, if I know I'm trading on counter trend, there's no reason to hold runners. You just take everything at your target, or you take at 10 and then hold runners if you can continue for a second target. But if you don't, there's no reason to hold them to the stop. Like, it's not going higher. But sometimes you don't know if it's bullish or bearish. Like, this is an important level. This down here is the overnight high. So it makes sense to come back, test the overnight high, and bounce. Does that a lot, especially 30 minutes into the session. So it, like I said, I could see myself believing that this is going to continue higher. And I'll know that it's bullish if it can come back up here and develop volume above that. And then I'm going to expect all of these guys to cover, and we'll probably get like a big shoot up, right? Taking all their stops. So when instead what I see is I get half my risk off, and then it gives me aggressive signals down here below the point where all the volume was when I got involved, I'm now able to save, what is that? So my stop is 14. And so I'm at least saving a couple points. So maybe like $40 per contract, let's say. That adds up. I'll be honest. Like, those little warnings, they do add up. But I can also flip. So not only am I not losing $40 more, but I'm actually making $40 back from the stop that I potentially took here. So all of a sudden at this point, I'm like break even on the day, even if I was wrong and took it here. And even if I forgot to exit half of my risk and just held the whole thing, which I don't usually do, but if you did, you would get signaled to flip and before your stop. And like I said, you'd save like $40 per contract, right? So if you're trading 2 contracts, $80 saved. And then since you're short, you make that $80, and that will pay for the MAE that you took on the long. And then once it goes 10 points lower, I can get out of half my contracts and just let the runners run as far as possible. So that's just a good example of like how keeping an eye on the algo and to make sure you know some of these signals and patterns and when they are invalidated. Because another reason is there are some setups that occur underneath, like there are long setups that are valid that set up underneath lows, previous lows, and then we come back up and test that area again and potentially go higher. Well, a very easy way to filter out some of the stops, you're obviously never going to filter out all the stops, but some of them is if you know that longs that were taken here are invalidated, can't talk, if we can get the VPOC line, the yellow line, underneath where the line was at the point of entry here, which occurs here, right? At that point, it's bearish. So at this point, all of those long signals are not valid. I can't get long here unless I am targeting that level. So in other words, I need to have good risk reward to get here. And if I'm entering on the yellow, on the white, right, at 610.50, so now I need to be able to put my stop at like 600, Otherwise, it's poor risk reward, right? So if I don't see a reason, in my opinion, to put my stop down there, like on the candlestick chart, right? So this is 600. So if I look here at 14,600 and I look to the left and I'm like, there's no real support here. Like, there's no reason to think on a higher time frame, even the 15. 6, it's way up here. So my closest support from here is 14,590. So I'd have to take a 20-point risk and my potential to put my stop underneath that low like we demonstrated. And my best case scenario here is retracing for a 10-point gain. That's not a good idea, right? Whereas if you've now gone through that level, what did I say that was? It was, we're going to say it's 90 and be conservative. So I'm going to put a level at 90 and basically say, if we can reject 90 and I get an entrance to the long side, an actual pattern, I can put my stop underneath this low and be relatively confident that if it breaks, it's not bullish. And in this case, now, where everybody got long up here and is now trapped, best case scenario for them, they got long here. Otherwise, they might have got long here. But best case scenario, the lowest that line is, that dotted line, is here at 1050 or whatever it was. 2150, sorry. So I have to ask myself, if I have to put my stop here at, let's say, like, I don't know, 86.50. So if I have to put my stop there, do I have good risk reward to target where all those guys are trapped? Because if I don't, the only way this is going to work if the chart is bullish. And because I would have to expect it to go higher than that without pulling back, which is pretty rare even when it's bullish. But if it is trending up, it could definitely happen with higher lows and stuff like that. But if we are putting in lower lows and lower highs like this, this is my target. So I can't get long here, right? I need to get my signal back here. So in this case, we did get the sorry, I went too far. We did get the triangle here. And triangles in general are good places to join the trend. They're not great places to fight the trend, but if you want to be conservative and you think you might be at the low, waiting for the triangle is probably a good idea because it won't show up when you're heavy selling with no pullbacks. So you do filter out some fake outs by just waiting for the triangle to close. And so if you use that method all by itself with nothing more, you might get long at, let's just make the math easy and we'll say 650. So let's say you were a little bit late, you waited for this to close, you got long on this bar, right? Your risk to the reward here is okay. So if you think there's a chance that it might be bullish and you like this level and you like this setup, it makes sense, right? The thing is no matter what you're risking here, once you get 1-to-1, you're going to have to exit half the position most likely just to pay for the times when you're wrong. Because most of the time it's not going to get here, right? If you're counter trend, most of the time it's going to go 10 points or less and roll over. But the times it does go higher, it does come all the way to the 20 area. So you might get 20 points and you're only risking 15, 14, it's technically a good idea as long as you think 50% of the time you get that much. I don't know if it's 50, to be honest. With this setup, I don't really see it. But on a higher time frame, you might have a reason to do it. But one way or another, that's the way I would think about it. Let's see if it actually happens. I don't know if it does. Oh, it's so close. Oh, you're kidding. It literally just missed it. So did it hit where the purple bar had it? Yep. So it literally banged up against right where that dotted line was at the lowest bar of this move. If you look. So take a look at these. Well, the easiest way to look at this is if you look at the yellow line where volume was and where it's developing in the bar. So here on this wave, that cumulative volume wave going up, the bottom of that wave is this green candle, right? That's their bar. That's the lowest they were able to get volume developed, was on that bar. The yellow line where most of volume was, drop, 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 dropped. But then the next one went higher, right? So that's the lowest one. Well, this wave or rotation, I call them waves because of the Weiss waves, but that wave actually started on a down bar. See that? That wave, from the point of view of volume, that wave started here and then moved up. So where were the least affected longs when they got trapped? The most advantageous place that a long could have gotten involved here at a VPOC of the bars is 14,620, right? So once they get to that higher time frame, 15 minute, it's not that high time frame, but it is a higher time frame than the 15 tick Renko chart. Once they get that turn and they put volume lower, have a big volume bar, and then it's followed by a triangle, which is it's a signal. It's a weak one, but it's a signal that we might get a lift or a up rotation. Particularly if you trapped somebody down here, like this yellow dot on this tiny little bar. When that one gets trapped, which actually only happens once you've gotten volume above it, but if he gets trapped, the potential for this to retrace back up through here somewhat is likely. But because these guys got trapped, the first likely place for them to exit their trade for break even and possibly go short or at least sell is 14,620. And what do you know? As it goes there, they reject and it goes lower, right? Now, in this case, they did eventually hit the bull bar one here. You just had to wait for this consolidation here to finish. So just because it missed it by a point or whatever doesn't mean it's never going to hit it. But you're not going to be able to trail. If you see this, you're not going to be able to trail your stop here and survive long enough to hit this. So if you're going to hold, you have to keep your stop underneath that dotted line of wherever that dotted line was when you hit that high, this one. Particularly where the volume was highest, so here. And that volume was here. So your stop, if you're bullish, belongs at under 14,600. So as long as you're comfortable with that and taking that risk, you're good. But if you're not, if you're up here at 14,620 and you're like, I don't want to give back 10, 20 points, right? Like that's a couple $100, like, especially if you've got more than one contract. I don't blame you for exiting as soon as you see that bear bar close, even though you gave away 10 points you're saving 10 as well, right? So it's not wrong. It's just chicken. But it's good if you're trading with a trailing drawdown. It's the way that you have to do things if you're trading with a trailing drawdown. Thankfully, I trade with Apex, and with Apex, once you get the performance account and you make enough money in it, as long as you don't withdraw too much, the trailing drawdown pauses. So eventually, you don't have to trade that way. But initially, as soon as I see this, I'll just exit and I'll take the 10. And then if they set up again like this, because that's another good setup, purple bar followed by a blue dot, as well as purple bar followed by a star, that's good. So I can just get long again if it's bullish. But here I have poor risk reward to my target. So I wouldn't do it in this case. But then it does hit the target, and then you get the star down. So if I didn't exit everything, if I had held some runners thinking maybe we've bottomed, if I'm trading that Apex account, I'm out of here. I don't want to wait any longer, because even if we pull back, like I said, in this case, we need to keep our stop most likely. Well, it's interesting because in here, if I want to put my stop here, most everybody in that bar got active in that bar way at the highs, which is weird for a powerful bar, but it happens. And so what that basically means is my stop for the long can either go here as a hard stop, like right under it, or I can wait until I get the yellow line on a bear bar underneath 14, which happens here. So here, I'm actually out of the long. And like I mentioned before, I'm saving money here because rather than getting stopped out at 02, I'm getting stopped out at least 06. And again, 4 points doesn't sound like a lot, but as you go from the micros to the minis, all of a sudden, every point is $20 per contract. If you're trading 2 contracts, I mean, that's $80. Like, that's enough to, I don't know. I'm not going to go into it. But the point is like, it's not money you just want to burn if you don't have to. Because most of the time, you're going to get stopped here once you see this volume develop underneath where that dotted line was on the push to the high. So, anyway, kind of a little bit of a tangent. Let me take a quick break and fill up my drink. And then I'm just